We're recording this as we head into the June CPI. Our pivot was today. I said to everybody in the summer, all pivots are lows. You want to go long. I said if 58, 59.83 held, we're going to 60.50. If 60.50 holds, all these guys want out. I told you we're not going to roll over hard until everybody gets out. You have folks here at 60.50. You have some folks here in this closer 6,100, and then all-time highs. And most of these guys are going to want to come out and profit. So I suspect 6,200, maybe a pop above it just to get these guys out with profits. And then we roll over. You don't want to be shorting the summer, no matter how bearish anybody sounds, how much you disagree. Above 60.50, you should be trailing, but if we break up above 60.50, you can risk on and then just keep trailing additional stops, right? 6,100 has a cluster here. 6,200 is the previous all-time high. 60.50 rejects because, again, we're just riding this trend line. I said, everybody, what you want to short is at least a back test of this bull trend line or this trend line that broke out. But obviously, this is a little bit awkward. We're not going to wait for this reverse trend line. You don't want to short the summer regardless of what the track is. If 60.50 rejects, right, down to 59.83, 59.17. My projected path still stands that I told everybody. We came down here. I said, guys, back test here. This was the short that we caught, phenomenal short into April. And I said, guys, that's it. That's the low. Then we came up here. I said, again, if this trend line breaks, you want to short and then close your short because it's the summer. Memorial weekend has been a low for 21 years. And now we're approaching here. Now, can this be a top at 650? Yes, this could be a top. And then the market come down, continue the inverse headed shoulder. Let's say come down and get liquidity again at 58.30 or 57.36. But I suspect that what's going to happen is the market is going to even though the CPI might come in at 2.4, 2.5 is the estimate. So it's going to beat estimates, which the market's going to like, but it's trending in the wrong direction. So the market's going to say, okay, well, let's just get out of here. Let's get out between now and FOMC 6,200. Powell is going to cool off the market. That'll bring us down to maybe a 58.30 retest, right? Or 56.37. So the pivot is going to be our pivot today is probably going to be a pivot low. 6,200 will be a top. Market is going to cool off into July CPI. It should be another hot CPI. That'll give us an overreaction, 73.34, right, to make a new low or come back to 58.30. I suspect 57.36, even 56.34, which would be ideal because that would mark this right here, this liquidity of the shoulder that's been a little bit awkward. But let's just say that the market decides that it's not going to stop there. The market can come down here a little bit, right? 56.30, 55, any of this could be a low for the market. And then we continue higher into the July OPEX. So we're going to be 6,500, if not 7,100 into July. Why? Because what's going to happen is if this bill passes, the market is going to see that there's free liquidity, right? If they're going to start giving everybody $1,000 for free to put into the market, basically that gives one generation basically the start of universal basic income, but that's going to destroy the market after the money runs out. Where's the money going to come from? If the government is going to start putting free money, whose taxes are going to pay for that? It's not going to be these tariffs. Tariffs will be over. There is no tariffs. Tariffs are done. That means we're all going to have to pay higher consumer to give the next generation universal basic income. I mean, that's the end of capitalism 101. So trade your charts. Above uh, 59.83, your risk on to 60.50. You're above there, just keep adding 6,200 into the June OPEX. Then we're going to roll over. The other thing is that Q2 is about to end, right? So Q2 ends in the first week of July. The JP Morgan caller is going to roll. So I suspect that we're going to be up here around, if Powell will cool down the markets. We're going to come down into July. July CPI should be a heavy miss. We'll have a low on the 10th. If not, 57.36, probably 56.64, or come down here to 55.70. Grab some liquidity, bring some fear into the market. And again, the July run all the way back up to 5,600. If not, actually, we're going to be, let me grab my, let me pull this. We're actually going to be up here. Everybody's going to think I'm crazy, but we're going to be at 71.45 by July OPEX. If not by August, we're going to be up here. Let's just call it 61.45 will be. I'm saying it's going to be the July high, but we could run into August because there is no more tariff news. What starts coming in is all the supply chain shocks will start after July. Same thing with COVID. You're literally seeing the same 2016 run. And as we speak, we're breaking out above 650. So by the time you guys see this recording, we're going to be up in the nosebleed. So CPI should be year over year hot, but hit estimates. Then we'll start getting all the bad data after the July OPEX. So don't challenge the trend of this summer unless we get a breakdown. 59.83 breaks down. Yeah, start shorting to 58.30 to 50.70.36. But I said to everybody, this trend line, we're we're running it. There hasn't been a bearish summer in 21 years. So what are you challenging unless we break down? If you want more information on how we do this, comment below and we love to help you.